new branches which stands withdrawn, and they can only open branches with the prior approval of RBI. So it's not as if all growth is stopped, but you have to go to RBI for everything now in terms of opening of branches, and the remuneration of the MD and CEO of the bank stands frozen. Mr. Ghosh himself is more of a social worker and has started off as an MFI. So I don't think that is an issue, his remuneration. But opening of branches is definitely a very big penal action. Ritu Singh is also with me. Ritu, basically a little different from the Kotak case where the promoter had to bring down his stake to 40%. Here, this is a non-operative holding company. So I guess the feeling was that they would be a little more considerate about bringing down stake.
Yeah, you know, in fact, after the IPO of the company, even SEBI norms require that within 1 year of your IPO, the promoter cannot dilute its stake. So, in a manner of speaking, the two rules are really clashing, which is why, as Chandrasekhar Ghosh has often told us, they were continuously in dialogues with Reserve Bank of India for directions on this. Never at any point did Mr. Ghosh indicate that the promoters were unwilling to dilute stake. It's just that they were seeking clarity from Reserve Bank of India on whether or not, they would be allowed to retain the shareholding and which of the two, norms they'd have to follow even after the IPO. Now, for the non-operative holding company, that is the promoter of Bandhan Bank, the promoter stake holding by that is around 82.28%, and RBI rules require that within 3 years of becoming operational as a universal bank, the promoter has to bring down his shareholding to 40%. So, he'll have to reduce his shareholding by almost 40% at this point of time to meet RBI norms. Bandhan Bank began operations in 2015.
There are two major implications over here. Besides the legal point, of course, as to whether SEBI's rule of promoters not reducing stake and RBI's rule that promoters have to bring down the stake to 40%. My own sense is that it would not have been very difficult to get both of them together and get an answer. RBI is rapping on the knuckles with a very different, idea. I think the warning is also to Mr. Kotak. If you don't comply by December 31st, then this is the punishment. The penalty is no further branches. I think it is very serious. We can't take this as a small event. This is not just an impact on Bandhan Bank, where growth would be a little difficult. It's not that there are no permission to open branches. There is no generalized permission, and you have to go with prior approval. And remuneration would not even be an issue for Mr. Ghosh. I mean, his sheer market cap has risen so much that I think the remuneration doesn't even count. But I don't know how he is going to bring it down. What is the total market cap? And it will come up for you, 67,000 crores. Now, if you have to come down from 80% to 40%, 40% of 67,000 crores would mean something like, 30,000, 33,000 crores of market cap will have to be sold off. It's extremely difficult to do that in a short period of time. So I really don't know how Bandhan Bank is going to implement it. In Kotak's case, again, it is some 20,000 crores that will have to be sold off. So that is the overhang on the market. If Mr. Kotak doesn't sell, probably the same penalty will come because Reserve Bank has shown the way. These are our rules. Promoters have to bring it down in this timetable. If that is not done, then we will not allow you to expand.
I think we've seen enough and more examples of Reserve Bank of India, really tightening the rules on, whether it is compliance, whether it is governance, whether it's, promoter shareholding norms. The market cap figure that you were speaking of, that is about 67,300 crores. So yes, there will be a dilution of 30,000 crores or more required for him to meet these RBI norms. But, as of this point of time, I suppose, there's little...
no, I think tomorrow, on Monday, there are two stocks which will fall, and I think the Kotak stock will fall even more because it's just so much part of the bank nifty. It's much more traded, and therefore this is a very big statement coming from the Reserve Bank. I mean, in the past, I remember the first few licenses were given in 1994, and often companies did not, promoter groups did not comply. Centurion, all of them had to, bring down their stake. The Hindujas had a set of rules in IndusInd. They had a promoter lock-in for some time. Each one had different license rules. And they had the Hindujas at IndusInd had a lock-in period for some time. And then they had to bring it down. And often Reserve Bank would be charitable and give some more time
As they had done in the case of
the market.
Kotak Mahindra Bank, in their case, the promoter promoters were actually given more time to meet that norm, and now their deadline is looming at the end of December. In fact, what is interesting is that both of these players, Bandhan Bank and Kotak Mahindra Bank, we understand, were at some point looking at PNB Housing Finance, which would have helped them reduce their shareholding to some extent. Of course, now we know that Bandhan Bank has backed out of that race, so there will be some other ways that the promoters will have to look at to, sell this stake.
The entire
Perhaps
talk
a
of
huge
Axis
dilution.
Bank and everything was obviously because it was an easier way for Mr. Uday Kotak also to reduce his stake, and clearly his preference share issue is not something that the Reserve Bank is willing to buy. So this makes the whole thing a little urgent for both Bandhan Bank and for Kotak Bank. Bandhan because it has a microfinance background, does have a fairly decent distribution system already, and maybe can use those branches well. And there is the small leeway RBI has given that you can have branches with RBI permission. So I would assume that every time Bandhan Bank went for that permission, they would be asked, what is the next road map?
So, I believe as far as operations are concerned, given that Reserve Bank of India's notice is very clear, if you seek permission, they may allow them to open more branches, so it should not impact business in a large way. Remuneration of Mr. Chandrasekhar Ghosh, that is again another matter that I think Lata well explained. He's a social worker. I don't suppose that was on top of his mind. So operationally, I suppose, expansion of branches, one, they're already present very well in the country, especially in the northeastern region, by virtue of being a microfinance lender. Second, they do have that window open to open more branches if, the Reserve Bank of India gives them permission. So there is still a window open. It is not dire straits for Bandhan Bank just yet.
Actually, we have Ashwin Parekh with us, so we could ask him, and he has seen much of this from 1994 when the licenses came and the rules were not, the promoters did not reduce their stake. Reserve Bank was charitable to all those promoters. Mr. Parekh, Bandhan Bank has been issued a letter that since the non-operative holding company, the promoter company, has not reduced its stake to 40% in the given time, the bank will not be allowed to open branches. And without the prior approval of RBI, as well, the remuneration of the MD stands frozen at the existing level. Your first thoughts?
Well, I mean, I must say that, in the initial years when the sector had opened up, more licenses were given, there was a lot of additional time that was given to the promoters to dilute their equity. But of course, one must maintain that they could produce before the regulator valid reasons why they were doing so. So that was one, and mainly it was due to the market conditions.
Exactly.
One after the other.
How do you call it valid? Almost every time, if I remember, they used to say market conditions.
But then...
when you look back, those must have been very good market conditions. Okay, in any case, it looks like now it's a brave new Reserve Bank that is not going to stand for anyone breaking rules.
Yeah. Well, I suppose it has something to do with one of the observations that, let's say, the governor had made at a public forum in Ahmedabad, where he did mention that his empowerment in regards public sector bank is entirely different compared with private sector banks. In case of private sector banks, he can really, regulate more closely.
Yes.
Some of these aspects. Of course, this
and he intends to, and he quite clearly intends to use his powers over private banks.
So I think he's now continuously demonstrating it. That's the point.
Absolutely.
And with fewer exceptions.
Oh, yes, absolutely. I think there are no exceptions now to people not following rules and not being pulled up by the Reserve Bank. Mr. R. Gandhi has also joined us. He's the former Deputy Governor of the Reserve Bank of India. Mr. Gandhi, we just wanted your comment on this. Bandhan Bank, which is owned by a non-operative financial holding company to the extent of 82%, a promoter entity, has not brought its stake down to 40% in the given period, that is 3 years, and therefore they have been told not to open branches without prior RBI approval and to freeze their MD's salary at current levels. Does this come as a surprise? RBI in the past has been more tolerant of these errors.
Tolerance versus greater emphasis on compliance. Yes, in recent times, Reserve Bank is emphasizing more on compliance aspect. So compliance should be taken seriously.
Yes.
To convey that
But
message.
it's just as well that the RBI is doing that, right?
Yeah, obviously, because it has to see that everybody complies with, take with instructions and guidelines seriously. That's the message it is getting across.
Okay. Now, do you think it becomes now? In the past, promoters normally said, as Mr. Ashwin Parekh just pointed out, that market conditions are unfavorable, and that's why promoters would seek this permission. At the moment, market conditions are genuinely unfavorable. We have seen a savage 6-7% correction in the month of September itself in the indexes. And Bandhan Bank, from 67,000 crores of market cap, has to sell out. The promoter has to sell out almost 30,000 crore worth of shares. And Kotak Bank has to sell off some 20,000 crore worth of shares. I mean, at this point in time, that looks like a very tall ask, isn't it?
Yeah, you're talking about at the fag end of the time given, right?
Yes, absolutely.
There has been 3 years actually had been given. So no efforts had been taken in any of the earlier months. So suddenly towards the end, you cannot say the market conditions are not conducive, so we want additional.
No, actually, Ritu was making the point that I don't think Bandhan Bank was intending disobedience.
We had this conversation with Mr. Chandrasekhar Ghosh, actually, Mr. Gandhi, at the time of the listing of Bandhan Bank. And he said, we also are seeking clarity from RBI because SEBI norms say, in the 1 year post-listing, promoters cannot dilute their shareholding. Mr. Gandhi?
Promoter cannot dilute?
There's a lock-in of 1 year for the promoters, from the time of listing of the company to not change shareholding. That is what the SEBI norms say. And that, of course, clashes with RBI norms that said that by August 2018, that is within 3 years of operations, promoters' stake had to be brought down to 40%. Currently, I think they have over 82% stake, the promoters.
Right. So even if that is there, that point must have been known to the bank in the beginning itself.
So you mean at the IPO itself, they should have sold 40%, is what you're saying?
No, that in the first year itself, the promoter cannot divest.
Yeah, he is locked in. Yes.
That should have been brought to the notice of Reserve Bank at that time itself.
I would have assumed they would have done that, Mr. Gandhi. I mean, this looks like a genuine problem for them.
If they had done it and Reserve Bank did not agree to that, then that becomes the rule, right?
Okay.
With the remaining 2 years, you have to do instead of the 3 full years, you have got now 2 years.
No, I forget the Bandhan Bank listing date. I'll have to check out. Is it past over 1 year since the...
No, it's been less than a year. Bandhan Bank got listed in 2018. I'll get the exact date for you. But I think somehow in the first half of this year is when Bandhan Bank got listed. But it started operations in August of 2015.
April was when they got listed.
Yeah.
And therefore, 27th March, we are told, is when they got listed. So it's not yet 1 year. And therefore, SEBI would say that you can't... the SEBI rules will not allow the promoter to dilute. Mr. Gandhi, this is a genuine problem, isn't it? What you're saying is that when they listed itself, they should have divested the entire...
The argument that it is a genuine problem is at a particular point in time. But the time given had been for a such a long period. Why it could not have been done the earlier when it was doable?
Okay. Mr. Parekh...
but the pricing was not right. That would never be...
No, I don't think Bandhan is even advancing the price argument. Bandhan is advancing only the point that if we dilute now, SEBI will be upset. We upset SEBI rules and therefore we will sell probably on April 1st. May have been their point. I wouldn't know. In which case they are contravening RBI rules for a period of 8 months, from August to April. So it looks like a genuine problem, doesn't it?
No, actually I'm not fully aware of this particular position. That had to be seen. Whether there was no time available at all for Bandhan Bank to
comply. Yeah, that is the point. Unless at the IPO itself, the promoter had divested up to 40%. Looks like they wouldn't have had a chance. Mr. Parekh, what would your take be?
Well, I would say that in this particular case, it's a little peculiar. I mean, peculiar to the extent, to begin with, that the promoter has a large stake. I mean, much larger than what the other promoters had when they started the entire initiative. 82% is certainly a very large number to begin with. And the second is, I mean, the bank was mindful of this 3-year period. I mean, even at the time when it went for listing, So, I mean, certainly, I mean, I would say if they wanted to comply with both SEBI and RBI, then they could have planned it differently.
Okay.
But Mr. Parekh, could you take us through the SEBI norms also on listing, just to clarify? Once a company gets listed, there is a lock-in period for promoters?
See, I mean, basically, that particular provision is mainly aimed at protecting the retail investors' interest to the extent that, the retail investors should not, I mean, the promoters show themselves at the time of listing, and suddenly then thereafter they dilute equity and they are not there. So, I mean, in the normal course, such a thing is applicable to corporates more than anything else, and then in case of banking companies and all, if there are banking regulations, then those will also equally apply, I thought.
Okay. So your sense is which one prevails? I didn't get you.
No, I'm saying, therefore, that the company should have been mindful,
So the
of
company
fact
should have diluted at the IPO itself, is what you're saying?
That's the point, exactly.
Okay, okay. Well, probably they should have sought legal opinion as early as that. I mean, the operations of companies like this. They have been told that they can't expand, they can't open a branch without RBI approval. Can it seriously hinder growth, or can they drag on till, a few more months in April when they will be compliant with both regulators and they can sell off at that time? What is the way out?
Yeah, basically, see, Bandhan Bank's model has been a very robust one. I mean, basically, they have been opening up their network, expanding their network on a very vigorous basis. So, I mean, curbing the branch expansion is certainly one of the ways in which a clear message that the promoter equity has to be diluted is certainly being sent out,
Okay.
I would say.
You think the message is more to Mr. Kotak? He also will not be able to open branches if a precedent is followed?
But the banking models are different, Lata.
No. Do you expect RBI to come with the same, letter to Mr. Kotak if his stake is not brought down?
Well, different times, different, underlying facts also.
Well, I'm just applying precedent. Mr. Gandhi, what would you think?
See, not opening branches does not affect the business directly, because existing branches can still function, and they can continue to be increasing their business.
Okay.
That way, not opening branches per se is not a major business side. It's not a major impediment.
Mr. Parekh, if you're also familiar with the holding structure of Bandhan Bank, I suppose, it is held by Bandhan Financial Services, Bandhan Financial Holdings and Bandhan Bank. If these three entities were to merge, you think that would perhaps be one of the ways to bring down the shareholding immediately to around 40% levels?
Well, actually, that's up to the shareholders. I mean, they must have had, at the time when they were seeking the license to begin with, they must have submitted some kind of a plan. And the way in which they're going to bring down the equity of not just the overall, but the individual entities as well. I mean, what seems to have happened over here is, it's just that 3-year period, is coming in the way, perhaps. I mean, for every equity holder, all the promoters, when you get a license, you do believe that, the valuation that you may get at the market 3 years from you're starting the operation and 5 years from there are going to be different numbers. So maybe, there was some bit of an attraction there, I suppose.
But I don't know if they will be allowed to merge. Mr. Gandhi, if you could come in on that, banks cannot have other companies as subsidiaries which do the same business, isn't it?
Yeah, that's right. The bank cannot have subsidiary which it can do under its own roof.
So if they merge and they remain as separate entities, the microfinance companies, that also will be violating RBI rules. So this is a genuine issue for Bandhan Bank, and probably the only solution would have been to have divested the entire quantity of promoter shares at the time of the IPO, or have got both a letter, got both the regulators to sit together and resolve it, which they probably tried and didn't succeed. Would you know what would have gone into it if the two regulators could have been requested to come to a conclusion between them, Mr. Gandhi?
See, regulators would have checked up with one another what is a position relating to their own instruction. That I think there would have been some interaction among them. They would, each one will be looking at whether beyond that period is there any possibility. That is number one. Number two, it also looks like to convey the message that you have to take this point seriously, there's the least possible business impacting punishment kind of, penalty kind of has been applied.
I think
looks like.
Yeah, it's conveying the message without really hampering the operations of the bank. I think that is the important takeaway. Also, I suppose sending a message to other erring promoters that, there will be repercussions for not complying with RBI norms. But we're also, Mr. Gandhi and Mr. Parekh, do stay on. We're also joined by Abizar Diwanji of Ernst & Young. Abizar, if you heard the news that has just come in, RBI has placed some restrictions on Bandhan Bank for not meeting promoter shareholding norms. They cannot open further branches without RBI's prior approval, and the remuneration of the MD and CEO has been frozen until these norms are met. First, your thoughts. We were trying to understand if this clashes with SEBI norms as well, which require that after listing, the promoter shareholding cannot change immediately in the 1 year after, and that clashes with RBI norms that say within 3 years of operations, shareholding has to be brought down to 40%. Abizar?
No, correct. So there seems to be a clash. Though I don't know the detail of what Bandhan's actual position is, I think RBI must have made it clear abundantly in its initial application that you need to bring down the shareholding within 3 years. Bandhan's IPO happened a little later, and hence they are now in clash with SEBI's rules. But at the end of the day, I think this seems to be more of a technicality than anything else.
Technicality, Abizar?
Well, it seems to be one.
40% not allowed. I mean, 40% of the shares have to be brought on, 42 actually, which is RBI is asking them to sell 30,000 crore worth of market cap, or they will not be allowed to open branches. This looks like a fairly serious issue.
No, but I do think it is a serious issue, but it does seem to think that because it was clashing with the SEBI norms, that's possibly a reason why the divestiture has not happened. Now, I'm sure that the company would be trying to reconcile between the two regulators, and that's why I think it's a technical issue. And as and when that technical issue would get resolved, I think there will be an ability to sort it out. I think the answer to this would be to go to the RBI or get an exemption from SEBI, or go to the RBI and figure out a divestment method. Now, the larger issue here is that the ramifications that you just spoke about. I think RBI needs to get fairly sensitive about the fact that these decisions have huge market cap implications. Because the next thing I would think of is there could be a sellout, because the market would expect that shares would be dumped in the market at some point in time, when appropriate. So I think the market implications, which act on an impulse, as against a regulation which tries to get banks to abide to a few things. I just see it as a series of things that have happened to other people too.
I agree with you that regulators have to be sensitive to the market implications of what they say. But is it not correct on the part of a regulator to ask the regulated to take their rules seriously? Bandhan Bank knew about this rule the day they got the license. Why not sell out a larger part in the IPO? I mean, why should only the regulator be worried about market implications? Should not the regulatee be aware of the market implications of his own actions?
No, I agree. So in this particular case, that may well be the situation. But it may well also be the situation that they may have well applied, but they may not have heard back from these conflicting regulators.
Abizar, could you also help us understand how is the Bandhan Bank case from Kotak Bank? I mean, Bandhan Bank, diluting shareholding within 3 years of operations was the conditions that came with the new universal banking license guidelines. What were the conditions attached with Kotak Bank shareholding norms? If you could just clarify.
No, Kotak Bank was given a longer period to get the promoter shareholding down.
They've already got an extension once, yes.
So they got an extension once, and after that extension, they got it down. presumably Bandhan would also get the same extension at some point in time. So I do think that the regulator then will act accordingly and do it. Of course, Kotak, the second leg came about through an issue of perpetual preference shares. So that apart. So clearly for Bandhan, that
the preferential shares have not been held as valid by Reserve Bank.
It is not being, so Bandhan will not have that option, is what I'm saying. But really what, I think they will end up getting an extension, because I'm sure Bandhan, the bank that it is fairly conscious of the RBI regulation. It's just that
why would you say,
applied...
I am sure they have applied to RBI for an extension and pointed out their, I mean, they would have done it on day one.
Their inability because of conflicting regulation, sure.
Yes, they said that in the press conference, and Mr. Ghosh said it privately to us as well, that there is this issue, and that he has written to the Reserve Bank.
Correct.
But I don't know if he has since heard from them. He doesn't want to make any comment at the moment. But the point is, is there not a discrepancy, Mr. Gandhi, that entities like Kotak got such a long time and Bandhan has got relatively less time?
Kotak case, if you recall that originally when they were given the license, there was no license condition that they have to bring down below 50, if I remember.
Okay.
49, I think. 49.
49%, correct, yeah.
So over the period, the policy guidelines have been changed about how much a promoter can hold. So periodically, whenever there was a change in the regulation, they was told to bring it down from the earlier permitted higher level to the newly fixed lower level.
So, Mr. Gandhi, you're saying they're not the same rules for Bandhan and Kotak at this point of time, because to Bandhan the new universal licensing rules apply? What is exactly the
because
differentiation?
licensing conditions are different at different point in time. When in 93 licensing conditions were different, 2002 licensing conditions were different.
So could one or the other of the banks not argue for a retrospective change in these licenses to suit their requirement?
That was the argument that used to be put by Kotak, saying that when we were licensed, the conditions were X, why you are changing now?
Okay.
So that for that there is an answer. Typical answer is yes. That as the things evolve, not only licensing the condition, other conditions will also be changing.
So Bandhan could say that given Kotak Mahindra Bank was allowed an extension, perhaps they should also be considered for the same.
No, that will not be an argument, in the sense that you can kind of...
It may be a plea, but not an argument, you're saying.
But that is not just because in one case a little the forbearance in terms of time has been given. Every case it should be given. That cannot be made as a rule.
Forbearance cannot be a right. I take your point, Mr. Gandhi. Forbearance cannot be a right. But even if you look back, all other institutions, HDFC Bank, ICICI Bank, and then of course later on Yes and Kotak, have all got much longer periods for the promoter to bring down their stake. Bandhan seems to be singularly unlucky in that.
But unlucky you can say, because those years the compliance, when banks would bring forth certain difficulties, whereas banks seem to have kind of understanding, yes, recognize that and give them little longer rope. At this point in time, that doesn't seem to be so. That's it.
No. Actually, in the case of IndusInd, if I remember right, I remember the management arguing that they were told the promoter shall not bring his stake down below a particular level, and that used to be the rule for a fairly long period of time. I mean, I forget what the thresholds were at that time, but they said you all have changed the rules. When we got the license, you actually told us not to bring the stake down so that there's skin in the game. And thereafter, the rules changed to say that we want wide ownership, and therefore...
minimum promoters holding has always been that they cannot bring below that.
Okay.
But that is also true. Just as minimum has also been put in for a particular lock-in period.
Okay. No,
During the lock-in period, you cannot ask to go down below that.
Okay. Yeah, no, I thought that the rules changed rather dramatically, or that was the argument that IndusInd was making. Abhizar, I just want to ask you, do you think... Bandhan will take RBI or SEBI to court over this? I mean, if you're locked with two contradictory regulatory rules, is it our fault? And it's not a small amount of money for them. They have to sell off 30,000 crore worth of market cap.
As you rightly said, they obviously knew of these rules from before, and they could have planned themselves better. So I think taking it to court, I don't think is going to be an answer.
Mess up, yeah.
Yeah, I think it's a mess up on their side too. What would be a right answer is to go and seek some kind of discretion or forbearance, which is, as Mr. Gandhi rightly said, is not a kind of privilege, but it's something that the RBI can grant on a piecemeal basis, and go for such kind of a forbearance and make it happen in a few months, quarters, whatever the case may be.
I think forbearance is a word that does not exist in the dictionary of this RBI, not on anything, not on NPAs, not on promoter rules, and I think that's all for the better for the industry. I think we have J.N. Gupta, so if I can interrupt 1 minute, Ritu, and get Mr. J.N. Gupta also into this conversation, well versed in the law of both SEBI and Reserve Bank. Mr. Gupta, we have pulled you out of a meeting, so we need to apprise you that Bandhan Bank has just been served a letter by the Reserve Bank saying that their non-operative holding company, which is their promoter, ought to have brought its stake down to 40% within 3 years of being given the license. And since they have not done so, the bank cannot open. The general permission to open new branches stands withdrawn. They will need prior permission of the Reserve Bank to open branches, and the remuneration of the MD and CEO is frozen at current levels. Your thoughts, just to add what Ritu has been explaining, the Bandhan Bank's quandary was the SEBI doesn't allow promoter to dilute for 1 year after listing, and that was the plea they were making to the Reserve Bank.
Okay, I would say going by the law, I don't think that plea will be acceptable for the simple reason, because SEBI rules always say that if there is any sectoral regulator and which sectoral regulator has given any dictate, that will right. That is what is my understanding.
Okay.
But we'll have to see what were the terms of IPO document. But having said that, I would say that RBI has to do some introspection and understand what for they are making such rules. For the simple reason, what have you achieved by dilution in ICICI Bank, where diversified is there? What have you done in Axis Bank, and not what have you achieved in Yes Bank? Okay. So if you are linking governance to the promoter holding, I don't find any causality analysis and something.
I was expecting... So I was expecting one of you to raise the issue as to have we solved the puzzle of governance. Reserve Bank for some time thought that more skin in the game is better governance from the promoter, and then moved on to an argument that widespread ownership is better because you're handling public money, and if the promoter has too much power, he could be lending out depositors' money to his own relatives, and therefore there should be widespread ownership. This is a corporate governance debate which has gone on. I mean, we could swing on either side.
One of the people that formed those new corporate governance norms, Mr. Uday Kotak himself, has on multiple occasions said that, little skin in the game for promoters. RBI rules that mandate only 10% ownership in private banks is not really good for the banks, and there are multiple examples to show that with little skin in the game, the kind of harm that can be done to the company. So he, for one, is completely in favor of promoters having more skin in the game. So clearly that's also visible, from some of the conversations that he's been having with RBI with respect to diluting.
I will tell you his argument, because he is the owner, his argument is there. But as a becoming outsider, I would say that curb the promoter's power by 100 regulations, but let his skin in the game be high. What is harm in exposure is high economic exposure with less voting power.
No, I take your point. I take your point, Mr. Gupta. And there has been this prevailing argument even in the Reserve Bank that it doesn't matter if a promoter is fit and proper. Then it doesn't really matter what the stake is, whether it is as low as 5 or as high as 50. But it is fit and proper that is more important than a stake. But be that as it may, now the rule is the rule. I think it was in May of 2013 that the rule came.
Lata, the problem is different. RBI doesn't have one rule. RBI has different depending upon their age. And I don't think governance has to do anything with the age. And secondly, my argument is against a holding company with a diversified holding and a substantial holding in the bank is much more dangerous than a direct holding. Because there with the liquid holding, you are exercising voting power of 40%, 50%. So somewhere RBI has to open up its eyes and open its mind and see what is their objective. Is their objective implementing letter of the law or spirit of the law?
No, I accept that there is an argument over there, Mr. Gupta, and I would assume that a lot of people in RBI or ex-RBI biggies have also accepted that fit and proper is perhaps a better litmus
you will
test.
not name them, but I will say that Mr. Reddy has openly said that there is need to look into the ownership norms.
Yes,
Dr. Reddy has very clearly said this.
Yeah, I remember reading a speech to that effect and not quite agreeing with the numerical threshold put in, I think, in 2013 May. Mr. Gandhi, last word on this issue. I think this is a live debate.
Hello?
Yes, Mr. Gandhi. There is an argument that if someone is fit and proper, why put a number to his ownership?
No. In this case, as I said that by the current penalties which have been applied, it is not, but it is to communicate the message, because the bank can still seek for expansion of its branches with the prior approval. So that way, it is not a complete freeze of their business. And the second one, the MD's remuneration putting on a freeze. That is also to convey the message only, because that is, again, it is not a serious, seriously impacting the CEO. So by the message has to be read that you have to be serious in complying with the conditions. That's it.
Quickly, if you could tell us, given, let's assume that RBI does not grant more extension to Bandhan Bank to meet this requirement, what will be the few steps or next steps that we could expect from the bank in terms of meeting that norm? Okay, I think we've lost the line with Abhizar, but Mr. Gupta, if you could answer that question, what is the immediate next step that Bandhan Bank could take if no extension is granted? What are the options available to them?
See, please understand, in our current system, it is very difficult for an entity to fight a regulator. Okay. The only thing is this, you can fight with a logical manner and ask the regulator to please constitute a committee immediately to look into the ownership norm which are in the mess.
Sure.
Because if all the banks you see, at one point of time, RBI said that minimum 49% holding should be there.
That's right.
And then they said it should be along with the FDI guidelines that 14% is allowed. Then they said this should be there. Then suddenly they said it should be 15%. Now, first you ask the person to increase it to 14%, then you say bring it to 15%, and then you have a different ownership norm, because I was born in 1954, so I have a different ownership norm. You were born in 1980, so you have a different ownership norm. This is illogical.
Yes, sir.
Mr. Gupta, Mr. Gupta, Mr. Gupta, I completely accept that there is that other argument as well that is live, but I would still think that Reserve Bank is ensuring compliance. Separately, there could be a live debate.
I do agree.
Separately, we can have this debate, but at the moment, it's ensuring compliance. So we have to go into a break.
Lata,
yes, go ahead, sir.
While ensuring compliance, you can't destroy an institution. After destroying an institution, and the committee says, okay, the ownership norm should be increased, then you already institution has been harmed. So you have to say that, okay, hold it. For 1 year, we are holding it. We are constituting a committee. Let the committee come up and something. Because there is no causality. Everybody talks about the Global Trust Bank. Global Trust Bank did not fail because Gelly had higher equity. In fact, Gelly sensed that something was wrong, so he started selling the equity. Reserve Bank failed to notice the signal.
Okay. All right, your point is taken that a debate is called for in terms of ownership and the various stages it has evolved in. But we have to take a break at this juncture. We have not done that for an hour. Thank you very much, Mr. Gandhi, Mr. Gupta and Abhizar Diwanji for joining in this discussion. The net result is that at the moment, Bandhan Bank and Kotak Bank could have some reverses in the stock price on Monday. We take a break and we